Okay, so Jalo, I think we can begin. Let me just.
Hello, can you guys hear me?
Yes, I can hear you. Can you see the screen? Is it clear? Hello?
Yeah, it's clear now.
It's clear. All right, cool. So you can proceed.
Okay, thank you, Kofi. So I am presenting on Unilever Ghana, and so I performed some analysis on them, that is their operating performance and their stock history with some valuation. So Unilever Ghana is, as we all know, is a Ghana-based company that is engaged in manufacturing of fast-moving consumer goods. So it is part of the Unilever Group UK. So Unilever Ghana operates across 3 segments. That's the food, the home care, and the personal care. Oh, sorry, I think my laptop have joined. Okay. I hope you guys can hear me now. So
yes, I can hear you.
We can hear you.
Yeah. So in 2018, Unilever sold out their spread business. In fact, before that, they sold out Fritor to Wilma Africa. And last year, they announced that they are going to spin off their tea business, that is the lip tip. And it was concluded as of end of last year by December. So looking at their operating performance, Unilever is really a struggling business. So their revenues have been growing, but at a slower rate compared to their industry, but other industry competitors. So they have been hugely unprofitable. This is largely due to their revenues. So their revenues have been like below the 600 mark they achieved in 2018. So as you can see from the revenue growth, even though this year they've achieved full year 2020, they've achieved a 15.5% growth. That was largely because revenue fell in 2020. So they are still in the recovery mode. Looking at what other companies did, this is far like a very low figure. So looking at, in fact, the 3 months that just ended, it's like their performance for last year is the same thing they are doing this year, with just a slight decrease of 0.1%, comparing it to the last quarter of, comparing it to the first quarter of 2021. The cost of goods sold have been so high, have been above 80% since 2020, and they've still maintained it at that rate, around 80 to 83%. This translated into lower margins. So looking at the 3 months just ended, that is 31st March, you could see they achieved just 18.6% margins. That is compared to 16.6%. So that is just a 2% increase in margins, which is not impressive compared to what they have achieved in full year of 2021. It's like they've maintained the same benchmark. With the economic growth that is happening right now, other companies like Guinness made revenues of over $1 billion. Unilever is just returning like 18.6% in margins. They're, like I said, they're a struggling business and they're really struggling to sell their products. This is reflected in their selling, distribution, and administrative expenses. It's been really high. It's been like 26%, 26.3% for just the last 12 months of revenue is spent on selling and distribution alone. Putting all this together translated in net losses. So operating losses have been experienced since 2020. And even though their losses are declining, but the rate at which is declining is very slow. So with this trajectory, they're expected to start to make profit, let's say in the next 3 years, which is not quite impressive looking at what other companies are doing as well. So that, like I said, for the third month ended, they have fairly done the same thing. So it's like they have not seen any improvement in their operations comparing the first quarter of 2022 to the first quarter of 2021. Can we move on to the next slide? So looking at their share price, Unilever share price have been stagnant since last September of 2021. This is largely, in fact, it fell in July to 2 cedis. Then it rose to the 5 cedis 90 pesos in September. Since then, it's been stagnant, and this is largely due to the market expected Unilever to Unilever have been making losses since 2019, so the market could understand. Then 2020 came, they made losses, so that was industry wide. COVID affected people's purchasing power and inflation and all that. But in 2021, they still returned losses, so investors were pessimistic about the stock, and the share price fell to that 2 cedis. But ever since it rose to 5 cedis, it's been stagnant since then. And this is reflected in their earnings, their negative earnings for the past 3 years. And then it is hard to calculate their price to book value because earnings is negative. So you can clearly not able to calculate how much investors are paying for earnings when earnings are negative. Looking at their revenue growth. So revenue growth, like I mentioned earlier, for the 2021 alone is just 15%, and which returned a 3-year compound annual growth rate of 16%. And this, like I mentioned, they had 2019 registered the worst year for them. And because they are moving away, because they are recovering from their revenues, that is why the number is kind of huge. But looking at the compound annual growth rate for the last 5 years shows, in fact, just a single digit figure. Their EBIT margins also were negative due to high costs. Their cost, like I mentioned earlier, was above 80% for the last 3 years. And this seems the company is really unable to control costs. And with the economic fundamentals going on, with high inflation, high cost of energy going on, the company will really struggle to try to maintain costs. So this translated into negative EBIT margins of 8.8, even though it's better than the previous years, but it's taking them 3 years to still achieve net profit margins or EBIT margins. So they are still in the negative range. And with the pace they are going, it seems it's going to take them a long time to come back to recovery. So because net income or net income margins are negatives, so clearly return on equity is going to be return on equity is negative, return on total assets is negative, and all other metrics we could use from the income statement. EPS have shown some improvement, but like I said, the rate of improvement is very slow. So looking at the chart, we could see that we could see revenue falling in 2020 and EPS falling as well. But revenue rose to a higher level, much higher than the rate at which EPS increased. And this is fundamentally as a result of them struggling to sell their products, as reflected in the selling expenses. So 2021 to register, this is just for quarter 1 revenue. Even though revenue increased revenue was maintained, they were able to increase earnings at a minimal rate. So how does all this fit in our valuation? So we are saying, since net income have been negative for the past 5 years, that is obviously telling investors that the company has no potential of paying dividends. So dividend has been zero since 2018, resulting in negative dividend yields for the past few years. Yeah, so you can move to the next slide. So because Unilever, we know the fact that they are a fast-moving consumer goods. So the purchasing power of buyers really affect everything that they do. So they are into the sales of essential goods. So we examine now how the economic factors affect their revenues. And essentially their bottom line. That's the net income. So GDP is projected to grow on average by 5.1%, and that means it's projected that there will be more spending in the economy. But then this also, because when the economy is growing, you expect inflation to grow. And then this have been reflected, and inflation rate have been growing at a very, very alarming rate. And it soared to 19.5% during last month's reading, from comparing it to 7.5% in May of 2021. So this figure is really alarming. And what this means is that everything about production is going to be affected. This means higher cost of imports, with the with the CD depreciating against the dollar. And Unilever, most of their COGS are imported from other countries, means they are dealing in foreign currencies. So high inflation rate means higher COGS. So we are most likely not going to see any reduction in their cost of goods sold, as well as their margins are going to remain weak for the coming few years. With the government debt currently stands at 81% on average, and as a result, we have seen the implementation, or let's say the advent of the e-levy. So e-levy mainly is to help government generate more revenues to be able to pay debt. And this has consequences in the long run for the economy as people side away from using Momo services. This is going to really slow down economic growth, and slow economic growth means slow spending, and slow spending means less sales for Unilever. And putting all this together, the implication is that higher prices, that's inflation, means low purchasing power for the retail buyer of Unilever products. This means revenue would be affected as consumers shift to low-cost substitutes. So putting all this together, Unilever is like, I did not do the evaluation for the DCF. I could not have time. But then using relative valuation was going to be very hard because their net income is negative. So using PE multiples will not make sense. So the best way I could value them was using enterprise value multiples, and which I believe would be more technical. But I could write that afterwards after this. So at this point, I would recommend a hold or a sell for Unilever shares, because they are really struggling and there are better alternative investments out there. Guinness, Benzo Oil just announced one dividend, I think 1 cedi on dividends, and EcoBank is paying 81 pesos on dividends. Those are better investments than Unilever stocks that are not paying dividends. They are making losses, and the future looks really, really cloudy. So yeah, so this is my position. I recommend a sell for Unilever shares at 5 cedis, 89 pesos.
Okay. All right. Thank you for your presentation. I don't know whether I heard you right, but I think I heard that you said in the next 3 years they're expected to revenue is expected to start growing. Was that correct?
Can you come again?
I don't know whether I heard you right, but I think I heard you say that in the next 3 years, revenue is expected to start growing. Did I hear right?
Yes. Yeah, so with the pace at which they are going, they're expected to grow, but at a much slower rate.
Okay.
Yeah.
So I want clarification on that. Based on what? Because the way the economy is structured and the way, you mentioned substitutes for Unilever products, cheap substitutes, and you mentioned depreciation of our currency, which is never going to reverse. And yeah, and inflation too, it may slow, but it's still going to be in a range that's, yeah. So based on what are you saying, they're going to grow revenue. I want that explanation.
Okay, so what I meant by that is we would expect GDP growth. So higher GDP means higher spending in the economy, and higher spending means people are going to buy essential products, and these essential products are what Unilever provides. And since then, inflation, remember, is going to affect everybody in the economy. And in fact, small businesses will be affected more than the big businesses like Unilever. So their close substitutes are usually these SMEs that are operating. So Unilever kind of have more cost efficiency when it comes to managing inflation than those SMEs.
Okay. Samuel, you've been on with us from the beginning. Can we hear from you?
Yeah, Jello, I heard that you said you recommend a hold or a sell. The reason you just gave, is that what you are basing on to recommend your hold? The little hope that you have.
Okay. The hope just came to mind, but then I strongly believe it's a sell because the hold is like you have to be really patient for the next 5 years if that's what you're looking for, and that involves higher risks because you see revenue is very volatile, even though it's been growing, but then looking at the past 5 years, it's been really volatile, and earnings are not getting better. So since they are all losses, we can't call it better, right?
All right. Because I was wondering.
Because like they are really struggling. Even now, I was expecting their first quarter to be much better, but it's like they performed the same as they performed in 2020. And then I looked at other companies and they are doing far much better. Yeah.
Okay.
But then you say they produce essential goods, and these are everyday goods that we use.
Yes.
Do you know the problem? What is causing this revenue downtrend? By any chance,
Yes.
I'm just curious.
Yes. So the revenue downtrend, okay, it's actually uptrend, but it's very slow uptrend.
Oh, okay.
So the reason is they are actually struggling to sell. So at some time ago, they had problems with their distribution channels. So most of the people they are supplying to have some supply chain issues. So they are unable to do that. In fact, what is even making it worse is their cost of goods sold. That is really what they are really struggling to maintain. Because if you look at full year of 2019 was like 104% of revenue.
Yeah.
So it means they are making gross losses from 2019, and this is going to get worse because prices are going to go up and they are unable to sell. And if you are unable to sell, everything about their income statement is affected by revenues. Everything that they do is affected by their cost of production. So from this point, one, they are struggling to sell. Two, they are struggling to maintain their cost or to control their cost. So this is really what have impact on their margins. Revenue can grow steadily because people will still buy, but the cost you are using to produce those revenue is going to be very high. And then there was this thing they did last year. They did a spin-off of their tea business. They feel like they are dominating the market, so they wanted to separate it into a different company to actually promote more efficiency. Because now they have a different management, but then shareholders are still the owners of the company. So with this, they're expecting that they will create more efficiency, they will create more sales in their tea business. But then the fundamental fact still remains their cost of goods sold is high and they're struggling to maintain that.
Okay. The new management you mentioned that they have, is it really new? Is it really current?
Is it really?
Is it a really new management?
I think it's from within their company. They didn't provide more information on that, but they just said they have a separate management for that. I mean, that's how spin-offs work.
Thank you.
You're welcome. I hope I answered your question well.
Oh, yes. Thanks.
All right, let me mention, because it's being recorded, let me mention that these are our views as analysts of the company. All right, if anyone wants a professional advice as to whether to buy, sell, or hold Unilever shares, it's advisable that you speak to a professional advisor. There are many investment firms in Ghana here. You can approach any of them make sure that you see the SEC license on the wall before you start talking to them. So it's important that you seek professional advice before you hop into any investment action regarding Unilever. All right, so Alassana Jallo.
Yes.
Our big man. So I realize that most of your analysis, I think it's centered mainly on the revenue side.
Yeah.
The concentration was on the revenue side. All right. So therefore, when we want to publish your work,
yeah,
the headline could be, let's say, so after making a short statement, we'll say the focus on revenue. So Unilever projected to, no, we can count something, all right? But the focus will be on the revenue. I mean, it's done. We can also do another analysis and focus on the income. Here's the income, PAT, like anything. But because your work is,
so I was,
go ahead.
Yeah, like I was so tight this week because I really wanted to look at their debt. Their overdrafts are really going up to their debt, I think.
Yeah, debt portfolio is also very well done.
Yeah, you know, I mentioned it during the stock speech, it was like 23.4 something.
Yeah.
So it's really high, but I was unable to look at it because I'm very tight this week. Yeah, right. That's why actually I decided to do more of the talking than the writing.
Okay.
But if you want a report, a detailed report, I could just break down everything and send it to you.
We don't want a very detailed one. You can just you know, as we said, we want it to be very presentable to the investing public, so that when they pick it, it will be a snapshot of all the information that they need.
Right.
You understand? Okay.
Sure.
So you know, Unilever itself, because there is a manufacturing, is on the manufacturing industry, it is easily hit by inflation, interest rates, depreciation, and all those things that affect the economy. And it doesn't look too good. But we need to see, we need to you know, there are already some shareholders already in there. So is there anything positive that you can say apart from all these reds that we are seeing here? Does it look too gloomy as per your analysis that you did? Is there any positive that we can make? Because the shareholders, they rely on dividends. They want dividends, they want capital appreciation. And these are the two main. And at least the financial report should show some optimism. And from what you have done, none of these is showing. Did you see something positive, maybe aside what you presented to us?
What positive thing did I see? Okay, I think, did I see any positive thing? A second, let me verify these figures.
Okay.
Yes, let me verify. Oh, did I close this down? Okay, this is the one. So, okay, with the income statement, last year, we projected the revenues to grow like up to 614, like by 37%. And they only returned like 15%. So we also projected that their cost of goods sold will go down to 75% eventually on average. But then it ended up maintaining at 81%. And cost of goods sold, we're expecting that because last year was the best year for consumer retail company. It's even reflected in the markets. We see how bullish the stock market was. Stock prices were going up. Palm milk went from 140 to 5 cedis. We have benzo oil going up to 6 cedis, and now they are announcing a 1 cedi in dividends. So looking at it, we see a lot of their peers doing well, and Guinness made like $1 billion in revenues. in just the half year of 2021 in their full year. So to me, I'm very skeptical about Unilever. If they have successfully spin off the tea business, perhaps we could expect some efficiency that will come out of it, and then we will see growth in revenues. But then growing revenues at the expense of COGS or at the expense of SG&A results no benefit to the investor at the end. So really, what we should really be looking out for is the cost of goods sold. And the cost of goods sold, as you mentioned, is seriously affected by economic factors. And right now, we are experiencing a stagflation. Inflation is going up, economy is going down. So this is a typical like stagflation error, and we are heading to a recession if we are not careful. With the E-levy, that is going to slow down economic recovery a bit, because people are going to be reactive in the initial phases. But perhaps by the end of next year, people would eventually live with reality, and government will be able to reduce their debt, and then people will be happier. Perhaps, but I'm seeing that in next 2 years or 3 years. That's when I see good coming. But for now, these are adjusted figures. Let me mention. They added because the spin of their tea business, they added that on the other income in their financial statement. And in their financial statement, they reported a profit. But this profit is misleading because they are not in the business of spinning off. They are in the business of manufacturing and selling goods.
Okay.
So, because 2018 too, they did that and they reported extraordinary profits, extraordinary in 2018, because they sold their blue band and they added it. It was a lot of money, a lot of millions. So they added it on the other income. And then that really, this thing really increased their net income. But those figures, like I said, we have to be very careful. Since then, they have not done. In 2019, we saw what happened. It was a serious disaster. 2020, what happened? 2021, they sold, they spin off the tea business. So that also increased other income. So in their financial statement, they reported a slight net income, if you look at it, on the comprehensive financial statement. But then that is not the true picture. That is not what they do. They are in the business of producing consumer products and selling it. So that is why I adjusted those figures to reflect the reality of what they do.
Okay. So in your explanation, you made mention of a very big word, a very, very big word. You said, if we are not careful, we are heading towards an economic recession.
Yeah.
It's a very big word. Do you still think that is the case? Because if you're saying recession, then you are looking at a lot of factors, a lot of negatives in the economy.
Yes, especially for Ghana, yes. Global recession, perhaps. But Ghana, the way I'm seeing things that are going.
So you are saying
because energy prices are going up. We saw how energy prices are going up. Energy affects everybody. Like just this year, saw people posting about ECG increasing rates and all that, right? And we all know.
Don't mention the source. You go ahead.
Yes. So we saw all those things going up. And people are emotional, right? People are reactive.
Yeah.
So at the initial phases, people will not want to accept reality, whether we accept it or not. E-levy, politicians will make it happen. So it's there. So they would have a way. They would have a way of passing it. So when you go 1 year, 2 years, you see that your business is slowing down because you are not accepting more payments. You would eventually accept the 1.2% than losing the profits you could have gained.
Okay.
So it will come back in the near future. But for now, the rate at which we are going with the people's sentiments going on, the stagflation might turn into a recession.
Hey, Charlie, this word, I don't like it though. Okay, so
you don't like it, okay?
I don't like the word at all because it's a bit some way. The last time too, Albert used the word hyperinflation, and I was like, hey, brother, it's hyperinflation. It's a big word.
Yeah, hyper is big.
I think you guys should slow down us a little. You know, the situation, it doesn't look too good, but I don't think we are there yet. All right. If you're talking about recession, it's like then there's going to be job losses all over the place. It's going to be like hyperinflation. GDP is going to shrink. Income is going to shrink. Like it's going to be very rapid in this kind of sense. I don't think we are there yet. Let's just wait and see. You know, the politicians are telling us that the e-levy is in to solve a lot of problems. Let's just wait and see. We as analysts, we know that real income is going to go down. All right, spending is going to reduce. All right, because if cost of living is high like that, it is unlikely that people are going to feel free to spend, and it's going to affect economic activity. That's what we as analysts, that's what we think. But they too are saying something different. Okay, so you just wait and see. All right,
Sure.
but big words like recession and hyperinflation. let's hold on a little. All right, so all in all, it's going to affect Unilever Ghana. All right, Unilever Ghana is going to be affected by these factors. Okay, so you are saying that investors should sell. Now we are coming back to the market itself. If you are saying sell, so those who are selling, who should buy them? Do you see a kind of investors who you would say that yes, buy this stock, and because if you are telling everybody to sell and nobody is seeing any positive, then who are they selling to?
Right, that's a good one.
So who are they selling to? And it's going to be tough because everybody goes to the market and dumps the shares on the market. Then there are no buyers. Is there anything? So go ahead.
The problem is right now it is expensive. 5 cedis 89 pesos. What we are saying is that they are not worth that 5 cedis 89 pesos. They are worth 2 cedis.
2 cedis.
Because like if I took my time to value them, I am with the view that I would have reached around 2.5. So up to that amount, it will be a good buy. But at 5 cedis 89 pesos, it's expensive for a company that has been making loss for the past 3 years, that is not so in future prospects, looking at the economy, looking at their industry peers. And then you are paying 5 cedis 89 pesos for this company. It's expensive. While Guinness Ghana, who have just returned like $1 billion in revenues, have been profitable for the past years, is trading at 2 cedis, just a little above 2 cedis. We have Benso Oil, who are actually paying dividend, have been consistently paying dividend for the last 10 years, have been profitable. And then there is really a prospect in because they're into agri. If products go up, it does not affect their cost of production most likely. So it's their commodity prices that are going up. So, and then the company is able to pay dividends and they are trading at 6 cedis. So a company that is profitable, paying dividends, have a prospect, is trading at par with a company that has been making losses for the past 3 years. It's unfair. And then so anybody that is looking to buy at Unilever says to target the price at around 3 cedis, not more than 3 cedis for Unilever share price, until that they put their things together and start returning profits for investors. People should be really cautious about investing there.
Okay, so you're saying that if any investor is looking to purchase Unilever stocks, you should be looking at around 3 cedis thereabout.
Yes.
Around 3 cedis. Okay, so I think you've made a very good point. Eben, do you have anything to share with us? Ebenezer Yaodum. You know, is vying for the young investors. What is it, president? Eben, tell us.
Yeah.
Advisory board president, right?
So, I mean, Exactly.
Good.
Today I want to do more of the listening and the learning.
You don't want to say anything.
I'm just, yeah, I want to do. No, I don't want to say anything.
You don't want to say anything. Hey, my brother.
Hey, Eben,
You can't do that.
No.
And you are my boss. And he's my boss here.
How do you call it? I think this is the same company you pitched during the stock pitch finals, right?
Right.
Yeah, and then you presented something similar like this.
Right.
And so still the company, you are still saying that the company is not doing well.
I mean, look at their share price since we pitched. It's been the same.
Okay. So, and then I mean, spinning off major brands like the Blue Band and others. I mean, I think those are the ones that were really driving the company. So if now those ones are no more, then I think that the sale is a very good option.
Blue Band was sold, but
Okay.
Lipton is spin off, so it's like a divestment.
Oh, okay.
Yeah, so there's a difference.
Those are major brands I know. Okay. So those are major brands I know. And so the question is, so which ones are left? And which ones are going to be driving the company? Get it? Even when the major ones were there, you were spending a lot to sell them, like their cost of sales were so much. And now that these two major ones, like the Blue Band, for instance, is not there, I mean, what shows that they are going to be doing well?
So the Blue Band was sold in 2018. I don't have much. Then, like, let me clarify something here. Blue Band was sold in 2018, and then the impact was seen immediately in 2019 revenues, being the worst year for like a very long time. And then that reflected in 2020. So it was in 2021 they announced they are going to sell, they are going to spin off. So the tea business is still going to be under the Unilever brand, still going to be under the company. It's like a subsidiary.
Okay.
So that's the tea business. So their revenues are still going to be reported under Unilever revenues. So I was expecting, because they did the first quarterly results are going to be better than what they did last year, but it seems it's a little worse off.
Okay. I think with this first quarter, there's been a number of, I mean, up and down. So in the economy generally, so maybe you may consider the end of the year and see if they can do better.
Right.
Other than that, maybe we still have to go ahead and encourage them to sell.
All right. Thanks.
Okay. All right.
All right.
Evan, you cool?
Come again.
I said, I'm asking whether you're okay.
I'm not getting.
I'm asking whether you are okay.
I'm okay.
All right. Cool. Okay. So, Mr. Jallo, I beg you, you have to add some information about volumes that have traded through the period that you are doing your analysis. Okay. Like volumes of shares, buying and selling. How has it been like? Add information about that.
Okay.
And, I think you should, most of the narratives that you give, let it be, you can put them in the Word document for us.
Okay, so I should write a report, right?
Yes, just a report, right? But it should be more graphical. Make it more graphical.
More of graphic.
More graphical. We don't want too much English.
I don't like words, so me, I prefer the numbers.
Good. So yeah, the numbers, convert them to graphs for us, right? And then when you are done, you forward it to Samuel. Samuel is going to take the financials, as in the first quarter, and check with the figures that you have put there. He's going to make sure everything is right. Okay. I beg you can also put your passport picture at the top right corner for us.
Profile picture.
Passport size picture.
Okay.
Upright. So Alassana Jallo, Analyst Young Investors Network. Yeah, he knows what to do. Someone knows what to do. So just put your picture there and then send it to him. But it should be in Word. All right. Add the volumes to it. How would volumes be like? And basically that's the main thing that you left. And the focus, your focus is on the revenue. Just expand it with the narratives that you made. Right. We'll see whether we can get a very good headline for it. Then we'll publish it. Okay.
Okay. Cool.
I thank you for.
I hope that will not put me in trouble because I am an ambassador to Unilever.
You are?
I am their brand ambassador, so
Really?
it's fine. Yeah.
So, then you.
But I don't have the thing is, this is when it comes, cause like I worked with them like an internship, but it was just few days. So it was like a week and then it clashed with my academic calendar. So I had to come back.
Okay.
So when I came, yeah.
Go ahead, please.
Yeah. So when I came, that's how I say, okay, I've seen some things that I liked.
Okay.
Then I said, let me come and value them. But then it went this way. So it's objective. It's not anything.
Yeah. So that's why you have to make it more technical and very objective. All right.
Sure.
I'm sure when they see your work, they may like it and call you back.
Yeah. Okay. With Samuel, he's going to verify the data. So
he's going to verify the data.
Yeah. So with the statements, like I did some adjustments. Like I said earlier, the other incomes, I always adjust them.
Okay. So you have to explain to him. Just explain to him.
Okay, right. Sure. I will. Okay.
Explain to him. So I think that'll be it for Unilever, right?
Yes. So I'm supposed to do Goel next week, but then I have exams.
Okay.
Yeah, and Goel is like I've not really.
Well, have they released? I don't think they have released the financials.
Sorry, this guy's Total.
Okay.
So the time we'll be having it, I'll be having exams.
Okay.
And then downloaded some energy reports, but then I'm getting bored. The figures I need to take time to digest all that before I can get a good report.
Okay.
Perhaps when I finish exams, then I'll work on it. I don't want to produce some rush work.
Okay, that's fine. All right. Okay, so Samuel, are you there? He's not back. Okay, so someone sent a message that he's stepping back a little. But when you're there, you send it to him. All right, he knows what to do with it. All right, Ben, when are you presenting yours, please? Ben, it's off. All right, so Alassana, thanks so much.
Yeah.
Okay. Thanks so much. The car, I think we should do it tomorrow. I want you to be online so that we discuss it together.
Tomorrow,
tomorrow
is what?
Tomorrow is Wednesday.
Same time,
Yeah, the same time, 8.
Because I wanted to look at their financial statement, but when you told me that we are presenting both, I said, then let me just focus on Unilever. Because I checked with our estimate and they kind of met our estimates, and then their share price rose. So we have been keenly following them.
Okay.
Fella.
Oh, that's cool. That's cool. So implore upon him so that tomorrow both of you will join for that discussion.
Okay. Is it the facts behind the figures?
Yeah, for the facts behind the figures.
Okay, it's tomorrow.
No, it's Thursday.
Okay, it's Thursday, but we will have a meeting and discuss it before the meeting.
Before, right? Yes. Before. Yes.
Okay. Yeah, that would be perfect.
Okay. All right. So thanks so much. Okay, so tomorrow, God willing.
Thank you. Good night.
Good night, bye.